Per usual, living on this channel for educational purposes only is not intended as financial advice. Hope everybody survived the mini stop run coming into this already hellacious week for legacy data prints. Everything that you can possibly think of or throw at us this week is going to happen. This is going to be a high volatility week, and it's not necessarily based on what we sort of know will happen. It's how the market is going to react when those numbers come out. Monday, we've got bond auctions. Tuesday, we've got CPI. Wednesday, we've got PPI and FOMC. Powell likely is going to pause, remain at the same level. Very unlikely anything else happens there. What matters during that meeting and the press conference is what they say in regards to unemployment. If Powell comes out and says the economy's fine, the economy's strong. Unemployment's only 3.7%. It's gone down. The economy's gotten stronger based on the numbers. Markets may not like that because they've already tried to price in aggressive cutting next year. We also sort of know that CPI is going to come in down again this month, probably around 3.1, 3.0%. Last month, markets rallied on CPI coming in slightly under, like 0.1% under expectations. So if that happens again, we may just have just a crazy day over day, up, down, based on the success or anger in the auctions, based on what the CPI print is, based on what Powell says in the meeting. And then we've got retail sales. We've got quad witching on Friday. You can look that up. And the Fed's SEP is also being released this week. So a lot of stuff coming at us on the legacy side. On top of that, if you remember this chart from, I don't remember when, I guess probably a month ago at this point, I was pointing out this chart pattern on the DXY. We have broken down from the DXY. Risk markets have not been choppy. They've been rallying, which is what we expected here. We expected almost all these points to happen. They've happened. The problem now is we've got an inverted head and shoulders on DXY, which should push this back into the choppy, unclear. Markets thought it knew where the Fed was headed. Eventually now, it gets a little murkier. So we've got calendar events telling you it's probably going to be a risk-off week generally. We've got dollar strength most likely telling you we're probably going to see weakness in risk markets this week. Something else to watch that's been extremely unusual is we've seen 7 straight weeks of declines in U.S. oil. Gas prices down considerably over the past 12 weeks in the United States. That in and of itself acts as a mini stimulus for those who spend a lot of money on gasoline, right? And with the inverse of that on the S&P and the white here, we've had 7 weeks straight up. Might have been 8, right? And boy, doesn't that sound familiar. In crypto land, we're not alone. We are part of this world. We too have had 8 positive weeks back to back to back. Extremely unusual, even for Bitcoin, even for crypto. So what I expect this week is risk off generally everywhere based on calendar. DXY is already showing some early strength going into the week, which should help risk off. And the odds and the probabilities that the legacy risk markets keep going are probably, at least this week, right? I'm just talking maybe 1 or 2 weeks of sideways down, just reset funding, reset momentum, reset all these divergences, right? Make OPEC happy, whatever we need to do to just take a breather, make the bears think they won, and then we'll go from there. If we start to marry crypto with legacy, which if you're being honest with yourself, you kind of have to do a little bit more. We're no longer in kindergarten, okay? We're with the big boys now, and the big boys are going to be looking at what is the outperformance, what is the volatility, what are the drawdowns. Give me the 135 year numbers on this. So that's why I really like what Artemis has here. They're comparing Bitcoin, ETH, NASDAQ, SPX, and gold. And I'm sure you've probably already seen plenty of evidence from like Bitwise on how Bitcoin can add to a portfolio with small allocations, even despite the volatility. But in any regard, when BlackRock announced their Bitcoin ETF, that's really when we started to pull away from ETH. And it's kind of been good night ever since. Year to date, we've also outperformed ETH. Going back 3 years, a bit of a different story, obviously, right? But the question is, I think, as someone who was involved with this directly, I think ETH is just a harder sell for institutions. I think allocation-wise, it's going to be lower. I think those willing to accept it as an investable coin is going to be lower. I expect flows into an eventual ETH ETF to be lower. So with all that being said, I expect ETH BTC to continue to decline slowly over time, just based on flows. The good news is, though, it is almost impossible for Bitcoin, or has been impossible for Bitcoin, to underperform anything anywhere you look at it, right? You go back 10 years, it's a little unfair, but to get a sense of what the legacy folks are going to be looking at, it's stuff like this. And it's clear, like I said before, it sells itself. I mean, this is an extremely easy sell once you have a reliable, reputable institution like BlackRock with the product with low enough fees that makes sense. And this year-to-date number is certainly very impressive in an already impressive year for the S&P and NASDAQ. Now, before our little retrace party, I was going to come on here and say, well, funding is pretty high, guys. Better be careful. As I was in an ETH long at the time. Didn't get the exit I wanted because the network was volatile, congested. Something to always consider, right? You might have a perfect trade setup with exit, entry, stop loss, but you may not always get the price you want on a DEX because when things get congested, those orders don't always go through. So keep that in mind, right? Funding on some of these coins, on some of these exchanges, it's still quite high. I would never trade alts on BitMEX. I just wouldn't. Just look at the funding historically. I think this is because there's some sort of like cross collateral or something. I forget the term, but in any event, Binance funding's starting to reset. All this stuff is starting to reset. Now, throughout a bull market, we don't need to continuously reset. But the question here was, are we really going to be bullish for a 9th week in a row, right? You always have to ask yourself, probability-wise, has it ever happened? What does it look like? Where are we at in the cycle? You know, those are all the things that people have been talking about. And that isn't to say we can't close the week green still, right? I mean, we're a couple hours into the week, but I like the funding is calming down a little bit. So that's a good thing. Now, this was the liquidation cascade that we kind of saw. This is across all coins, I believe. I thought it would be more than this. It looks like it's around, I don't know, 150 million, maybe 200 million. With DEXs, I'm guessing that's higher. What's interesting is that it looks like AVAX actually retraced a lot less, and anything connected to an EVM looks like it retraced more. So it looks like there was a bigger liquidation cascade for DEXs, just on a quick glance, just kind of an interesting anecdotal data point. But something else I wanted to point out with funding is, again, Jason Shapiro with his positioning data for Bitcoin. So this is CME futures into 3 different categories: large speculators, small speculators, you and me, basically, and then commercials, which I think are miners. I haven't confirmed that, but I'm pretty sure that would be miners. And what he was pointing out Friday, so this data comes out every Friday, is that large speculators are the shortest they've ever been, I believe, and commercials are the longest they've ever been. Generally, he tries to side with commercials for longs. He likes to see small spec and large spec on the short side for a long position. So not quite perfect, but he was basically signaling, look, this is a lot of open interest, a lot of people taking opposite sides here, kind of similar to August. And that should help us with any sort of fireworks we may see this week. And I was also kind of looking like, how realistic really is it that we could get a 9th week, right? I kind of forgot that we had 9 red weeks in 2022. And if you kind of exclude these 2 green weeks in between, you know, it was a pretty ugly move in 100 days. Kind of in a quarter, it was down 60%. As ugly as that was, this has been quicker on the way up in less time, right? And it all kind of changed around June 16th when things didn't exactly look immediately turbo bullish, but we got there, right? We got there eventually as this ETF stuff became more and more likely. We also had Fed rate rises that we were dealing with in 2022, and those have plateaued. So all in all, things are looking pretty good from where we sit, I think, on the macro side. Now we have to dodge a recession, obviously, at least a deep one. We have to dodge some angry macro stuff in Q1, but just thinking about it and taking a breather, like this looks pretty good, honestly. Now a few white screens and we'll go back to dark mode, but I have a few forward performance graphs, just kind of, especially on a day like today, it's good to remember. If we look at the worst day of each year, this year it's actually been pretty tame. It's been the best worst day ever, I think, for Bitcoin. Maybe not ever, but probably ever. So we could still see an angry rest of the day to beat this, but let's say this is the worst day of the year. We're still up quite a bit from that worst day in August. And on average, we continue to see price appreciation from the worst day of the year. Just another reminder, if we are anything close to negative 10% on the day, historically, in a broader bull market, that is an excellent potential entry opportunity. There was also concern for people in January, like, that was it, right? We had 40%. We had 40% in a month in January. And look where we're sitting now towards the end of the year. We're not quite a year out from that print, but we've done quite well despite already having that excellent, rare month. You can also look at 8 consecutive positive weekly closes, which you don't have a lot of data for after 2014. There were a couple in 2013, I think one in 2012 maybe, but that data's kind of Point is here, again, 3, 6 month, 12 months out, not a lot of data points. Okay, it's an N of 2, but usually we're doing pretty good. Also interesting that the last string of weekly positive closes was October 2015, similar percentage, right? So it's something to watch and think about going forward. Like, I don't think it's completely out of the question that, yes, we'll have some retracements. We always do. I think Q1 is going to be down. I think Q2 is going to be up. That's generally what it's been. You can also look at the 20-week moving average, which historically has been excellent at telling us, are we overbought? Are we oversold? Where is support? And it looks like, again, yes, we are overbought. Yes, we will retest this in a healthy trend. Ideally, we don't move straight up like we did in 2019, like we did in 2020. Ideally, it's more like 2017, where we have repeated retests of the 20-week moving average, because then that should lead to a longer trend, a more sustained trend over time. If we look at the histogram of this, where are we at? Again, relative to historic numbers, we're kind of leaning overbought, obviously, but we're nowhere near craziness. This could get extremely crazy and overbought relative to the 20-week. That isn't to say, like, it's time for 50x long, boys. Just saying, like, it's not as overbought maybe as it feels relative to where we get when things do get wild. Now, we are in a pre-halving year, so you have to remember that, but things often get crazier on the crazy end. Looking at MVRV, just a spot check, this has risen quite a bit, quite quickly. You can see the last time, again, 2019. I'm just looking at a pre-halving year, MVRV. Potentially have a little bit more room. I don't really think we see much more. We may see 48, we may see 50, but to me, 42 to 48 is perfectly fine in a pre-halving year. Feels like at this point we're running a little bit on fumes and ETF hopium, and that could take us to 50. But I just think those probabilities, obviously, after 8 straight weeks, we need a little bit of a breather. This is NVM. This one's a little different. I don't know if I've talked about this one before or in a while, but it's looking at the Metcalfe's law, basically. And we want a low number here. So again, this tells me, yes, price is rising extremely rapidly, has risen rapidly this year, but we are not seeing, relative to daily active addresses, right? We're actually rising at a reasonable pace. We're not in crazy territory like we were at the very end of the rally, where this is telling you we are extremely overbought. It's more or less telling me that we're kind of in the middle of the road here. Over time, we certainly have room to run. So this is another one that I think is fairly valuable throughout a trend. All right, let's talk about charts now. Strictly price and TA, baby. And again, everyone's pointed this out. I pointed this out a couple times. Weekly edge to edge, check. In a pre-halving year, check. Expectation, 42.8 to 49.2. We hit it. Okay. Anything else higher is a bonus. 50, 70, all-time high, whatever it is, mega bonus, never happened before. Not the expectation. The expectation is not mega continuation. Ideally, we get some sort of consolidation to tell us, hey, this is probably going to break down. Get the hell out of Dodge, right? And ultimately, we'll see what happens the first week of January when the ETF likely gets approved. I say ETF, it's going to be like 50 of them. But when those get approved, we'll see what happens with price, right? But until then, we could keep going. We could retrace, there's no answer here. I don't have anything left in the tank as far as trade ideas because we've hit that edge to edge so quickly. So now everyone's just looking at 48, based on the March high. There's some VPVR evidence here. We're overbought on the pitchfork as well. So again, we're kind of up here with no real targets left. We're just running on news catalyst, you know. If I'm just looking at TA, to be honest, like if I was on a deserted island and I saw this, I'd say, oh man, they must be going wild out there, right? 8 straight weeks? That never happens. As far as an eventual retrace, the pitchfork likes midline, which this isn't a this week thing. This is a hopefully into having thing, right? Maybe it's 33, maybe it's 38, whatever, but it's most likely not going to be a mega continuation from here. On the daily, we're trying to reset this continuous bear div, right? Higher highs in price, lower highs in RSI. There's a sustained C-clamp here with a support somewhere around 35.5 or something like that. We have hit the daily Tenkin, so we have that. There was a question up here, is this an M double top? Is it another ascending triangle, right? I think this was a reasonable expectation that this could keep going. I mean, we've continued pretty hot and heavy for a few weeks now. And even looking at this today, this may fully retrace this week and away we go. But as far as the chart pattern goes, we've certainly nullified that idea. We've nullified the continuous parabolic momentum, which, you know, I always get nervous trading at the top of the banana anyway. So I'm kind of glad at this point that we've had what we've had. We can regather our strength and move from here. As far as dominance goes, dominance looks fine, still looks fine. I've had a lot of pretty crazy altcoin rallies over the past week. I think we're hitting a natural point in dominance just based on TA again, taking the measured move of the consolidation, projecting it forward. Trend-wise, this still looks plenty bullish. Doesn't mean we can't retrace, doesn't mean alts can't outperform here and there, but generally dominance still definitely looks bullish. ETH, on the other hand, bullish, right? But a laggard, slower than everything else. And it's harder to push ETH higher when it's easier to push other stuff higher quicker, right? Look at any alt, and it's probably outperforming ETH lately. It's still in the cloud. I still like this 26 to 31 eventual target here. Not much volume resistance on the way up, but this thing could chop around until after halving, right? It could take until July. Now, it typically does better in the first half of the year, but you may be waiting quite some time on that edge-to-edge move. It's also watching the potential for a flag here. Maybe had a little bit of a false breakout. Obviously, this did not play out as expected, but again, it was a laggard. Looked like we had a little bit of momentum left. Didn't quite get there. On the daily, if ETH gets below 1950, then I think ETH might be in a little bit of trouble. Yearly pivot's at 1990. The breakout was at 2000. Daily Kijun is at around 1980, right? So this is really the big support that needs to hold. Otherwise, you're more likely than not going to start to test that 1800 level. But again, that doesn't have to happen this week, but it's something to just consider and think about. Solana is still miraculously holding this daily Tenkin, right? Also has a growing C-clamp here. Kijun support at 48 on the daily. And just looking at ETH relative to alts again as we go down the market cap table here, deep dumpster diving in a second, it felt like it was getting close to ETH's time to start catching up. And this chart still looks like that. So this is ETH market cap relative to total 3, kind of an ETH dominance, I guess you could maybe think of it. And it certainly doesn't look bearish, but it hasn't quite, quote, broken out yet. If we look on chain though, for some of these coins, some of these layer ones, Arbitrum, Optimism, Solana, you can see the list down here. This is again on Artemis. Daily active addresses are picking up broadly. This is what we want to see. This is what we like to see. We want to see activity. We want to see people actually using this, whether or not that's because price is up or not. I don't really care. Usually it is because price is up or there's some airdrop FOMO, whatever. It's really good to see these chains actually start to have some utility, right? Solana eclipsing even Bitcoin here on daily active addresses. Bitcoin has had a resurgence of the ordinal crew, and that's going to raise fees and lower daily active addresses. So just keep that in mind. But collectively, this is the picture we like to see. Now, a lot of people have pointed out various versions of edge-to-edge trades on altcoins, and I think that's 100% correct. I think that's accurate. I think you got to be super patient. I would not play any of those on leverage personally. You can see we've had over a year of consolidation, finally trying to push into that weekly cloud. And ideally, you even get a better entry here broadly on many of these charts as this stuff maybe pulls back this week or next week. And if we go back to 2020 and 2021, Total 3 didn't actually hit the weekly cloud until much after the Bitcoin halving. And maybe that was a stimmies effect. So maybe we get more stimmies and that helps us do that. But there was a parallel universe where we don't actually hit this on an edge-to-edge move broadly quick enough to matter, It doesn't feel like that now because everything's sort of on this rocket ship. Sol, Link, AVAX, DOT, SNX. AAVE is kind of a laggard at this point. I put Zeke and EOS on here just to illustrate that not everything is a winner, because clearly some of these are lagging, but there's zero doubt in my mind that there will be an attempt eventually for even stuff like this, as long as it's listed on an exchange. There are a lot of charts that look like this. So on the spot side, I'm personally kind of avoiding trades that I've either missed or trades that I'm already in, and I'm looking for potential setups here, no matter how junky the coin, just based on the cloud, right? And we can look at a few of these. ADA also in the weekly cloud. Again, what you want, if you're honest with yourself, you want a better entry here. You don't want this to go straight up. You want this to chop around. You want this to try to retest maybe 42, something like that. But it certainly looks like it wants to go to 169 eventually, right? That could be 2 years from now. You don't know. SNX also, again, that mean reversion target, 16 and 19. They just removed inflation entirely. So there's that. Something else you have to dodge here is U.S. government just getting angry and geofencing all of DeFi. FTM, also, again, just absolute dumpster diving, hitting interesting levels. Matic looks like this on the weekly. Atom looks like this on the weekly. Not quite there yet, but if you're part of the hot ball of money crew looking for rotatable alts, right? This is one of them. Maybe Algo is another one. I haven't looked at that chart, but my guess is it's similar, where you have consolidated for over a year, and there will probably be some attempt eventually in some of these charts. Doge included, right? Doge is in the weekly cloud now on the USD pair. Maybe it hits 20, maybe it goes to 40. I don't think so, but maybe. If things get really wild on the BTC USD side, it's completely possible that Doge goes to 40. ETC is another one. Look, if I didn't know what this chart was, I'd say this is an excellent setup. It's been down only for almost 3 years. I know ETC has zero reason to exist, but this is Setup Sunday, and this is a setup. So we're talking about it. And maybe it goes to 100, maybe it doesn't. But I'll take a little stabberoonie on that. And I do like the horizontal resistance that it's at. I like that the cloud is almost ready to flip. I mean, this is exactly, if you're honest with yourself as a cloud trader, which I try to be, that's the type of setup you're looking for. Lastly, let me talk about GBTC and ETHE real quick. One thing I was thinking about this week is, how could this trade go sideways? If GBTC and ETHE don't get approved with the initial salvo, ETHE won't obviously, but GBTC may not get approved if the SEC wants to be super petty. And the New York AG suit against DCG may be enough for GBTC to get delayed. I don't know. I'm just trying to think of stuff, right? Yes, they won the lawsuit. Yes, they may have to refile. I don't know. I don't know what's going on behind the scenes, but you could easily probably do nothing for the next 2 years if you're holding this. I'm just saying, if you're looking for things that could go wrong, that would be one of them. Now, on the day, the market may not care, but just something to consider. The discounts have shrunk quite a bit on Bitcoin, and on the ETHE product, somewhere around 10%. Trade-wise, again, the setup is done, right? There's nothing else to do up here. As far as the cloud is concerned, you're just waiting for the cloud to flip bullish. For ETHE, it's got a little bit of a ways to go. And ETHE will be another interesting one to watch on the approval date. If GBTC gets its conversion, will ETHE just go straight to 26? Are all these products just going to go insane? What's that going to look like? Something to watch on the first week of January and to think about. Coin also continues to do well. This is the wrong cloud for these legacy trades, by the way, but it doesn't really matter. It's close enough. I like eventually 200 on Coin. That's not going to change for the next, 18 months? I don't know. It still looks very good. It doesn't mean there won't be a pullback, right? So just keep that in mind. This has run very hot for quite some time. And ideally, we get 108, right? Before 200, maybe as a little reload. Lastly, WGMI also. The miners ETF looks very good. So across the board, we are on time and ahead of schedule as far as expected moves through the weekly cloud. Watch for volatility this week. Watch for this crazy calendar we got in front of us. And just have a plan. Doing nothing, also a plan. You can just sit through this. There's nothing that says you need to trade this. I'm certainly going to have a really light touch this week on any leverage positions or active positions I have. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.